Well, new data out this morning is giving us some insight into how the U.S. economy is doing.
That's right. The latest producer price index shows a decline of 0.5% between February and March. This is an indication that inflation could be easing. Economists were expecting an annual inflation, as measured by the PPI, to land at 3% for the 12 months that ended in March, and for no change from the month before. Ahmed Riesgo joins us now. He's the Chief Investment Officer for Insigneo Financial Group and joins us from Miami. So, Ahmed, PPI is just one of several closely watched inflation gauges. Talk to us about why it's such a strong indicator for the economy overall and what these numbers mean.
Right. So like you mentioned, it's basically capturing what's happening among producers. And taken together with CPI, which we got the day before, it gives us a really good read on what the overall inflation outlook is for the entire country.
Well, tell us what's been driving the fall in wholesale prices in the last month.
Yeah, no, look, this number, I think it's overall was a positive, and you're seeing the market react quite positively to it. So the headline number was driven by a drop in what's called energy prices. That dropped 6.4%. But really, the good news in this number is what happened in the core number. The core number is something that the Fed is much more focused on because it strips out the more volatile components like food and energy. And so the core number came down, and that was actually being driven by gross margins, what's called the trade services component, which basically is a proxy for what's happening with gross margins. And this is important because back in 2020 and 2021 and early 2022, the increase in gross margins is what was really driving the increase for consumers, especially in the goods services. So it's really good to see this core number starting to come down.
Look, when I saw that egg prices had dropped by 10%, I thought that's something people will be happy to see. But another important indicator for the economy is the weekly unemployment claims. That climbed to 239,000 just last week. I understand that's the highest level since January of 22. So how does that play into the overall mix and picture?
Right. So there's been some commentary I've seen out this morning saying like there's a lot of volatility around these numbers around the Easter holiday. And that's true. But we now have several prints that are showing us that the jobless claims numbers are definitely trending up. And that's actually starting to match with what we're hearing from Challenger, the layoff announcements. If you take a look at the first quarter of 2023, we've had more announcements of layoffs in the labor market in the U.S. than we've had for several years. You almost have to go back to 2015, 2014 to sort of see a similar print. What this is telling us, and I think this is going to be reflected by the Fed soon, it hasn't happened yet, is that the Fed is going to have to pretty soon be a lot more concerned about recession risks than inflation risks.
Certainly something that we're all watching. Ahmed Riesgo, thank you.
Thank you.
Thank you.